Welcome to Global Risk Community Chat. Today, our guest is Sophia Shluger. I'm very happy to have you here today, Sophia. Welcome.
Thank you so much. It's fantastic to be here.
Yeah.
As mentioned, I'm Sophia Shluger. I'm the head of business development for Amber Group in the UK and Europe. We're a globally integrated crypto finance firm offering both retail and institutional clients an opportunity to access liquidity, earn yield, and mitigate risk in digital assets in a secure manner. And I wanted to say, as we're entering the new era of the metaverse, we think individual wealth is being built and managed in ways previously unimaginable. So our platform, Whalefin, is that gateway to the metaverse, as it helps our clients on their digital wealth journey by giving them access to diversified earn, invest, trade, and loan products. Just a quick word about Amber Group. We started in 2017 by a group of ex-Morgan Stanley executives. And since inception, we have traded with over 1,000 institutional clients. We've returned last year 150 million in interest payments back to our clients, and we currently have about 5 billion in trading capital or assets under management. We also are a large liquidity provider, accounting for 5% of the daily volume of crypto trading. And as such, we connect to over 100 exchanges and trading venues. Our team of 700 fintech specialists are located on 4 continents in 12 offices. And we have achieved unicorn status last year after we raised $100 million in our Series B at a 1 billion valuation. So that's just a little bit on myself and our company.
Yeah, that sounds super interesting. Also sounds super successful, really interesting to look into, I think. But let's jump right into the topic of the day. So can you perhaps explain some or discuss about risk management in your industry and also or on the digital assets end?
Yeah, absolutely. I think it's a really important question because risk management in crypto is very essential. So I think if we take a step back and perhaps think about each coin, for example, there are different characteristics and qualities that they have in regards to security, programmability, and governance. So for example, Bitcoin or BTC, of the digital currencies could be considered a relatively simple construct. It's essentially designed to send, receive, and store value in a permissionless, decentralized, eponymous, virtual, and cryptographic format, basically with functions that replicate that of money and gold. And it's also mined via proof of work method, as opposed to the new, less energy intensive method called proof of stake. Now, if you compare that with the second most widely traded cryptocurrency, Ethereum, that extends the core functionality of Bitcoin, but adds more complex self-executing smart contract capabilities. And that can be used digitally to replicate complex financial instruments, transactions, and contracts. So Ethereum not only is a currency, but it also has utility in that it's used as a gas to facilitate transaction on the Ethereum blockchain. And it's also used in the creation of exchanges and digital assets, apps in particular, we call dApps. I think one important thing to consider is that cryptocurrency market is generally less liquid than the traditional asset classes. And there is at the moment no consensus valuation approach, although there are several that are utilized. As such, because of the transparency and illiquidity, pricing information across different exchanges or venues can be very different. I think that landscape is also further complicated by the fact that there are specifics as it relates to the issuance and governance of cryptocurrencies. So transaction tracking, consensus validation, those responsibilities are often divided between cryptocurrency issuers and users. In addition to all of that, there's the regulatory uncertainty with jurisdictions across the world approaching it in different ways. But that said, the institutional interest in cryptocurrencies is continuing to grow dramatically. And I think it will be dependent upon the continued development that we're seeing in prime brokerage solutions and institutional grade custody solutions. So today there are very specialized institutions and fintechs that are offering bespoke solutions. And that ranges from, whether it's simple digital wallets and how the private keys are stored, whether it be cold or hot storage, and all of the different functionalities and benefits and disadvantages that those offer.
Yeah, that actually sounds very interesting on the sense that I think Like I hear the current trends or like current status of the blockchain market in general, but also of course risks or like certain things or aspects coming along in terms of governance or regulatory point of view. So I would say let's then maybe jump into more of a practical part of it, and I want to kind of hear your personal opinion or view on, or like Amber Group's view on managing risk, and perhaps like based on also that, what our audience could take away from this conversation, or like your example, and start implementing if they are interested in applying blockchain and also maybe risk management together.
Absolutely. I think that's a fantastic question. So as you can imagine, Amber Group handles hundreds of millions of asset transfers daily. We've actually traded over $1 trillion notionally since inception. And so security of our assets are our number one priority. We have a large team in Asia that's dedicated just to analyzing and safeguarding our assets, and we reinvest a huge proportion of our revenues into that. We also have many years of experience in cybersecurity, crypto security, and operational security across our firm. I think one way in which it differentiates us in the market compared to some other exchanges or trading venues is that we have a very deep institutional pedigree. Our backgrounds are in traditional finance and technology, and so we have that long history of risk management in both the traditional asset classes as well as the crypto markets. We currently have a risk control system that ensures 24/7 real-time monitoring and the ability to respond to situations in a timely and effective manner. We also have internal rating mechanisms that assesses different risk exposures, and that's according to the nature of the business that's being conducted in-house and with our counterparties. In addition to that, we obviously have a 24/7 InfoSec security team that's obviously concerned with reducing the risk of any security incidents and data breaches, of which there's been none to report, and to ensure everyone is on the same page, obviously with protecting sensitive data assets of our clients. Security orientation sessions are available and mandatory for all hires, as well as regular training seminars for our employees. We also have implemented a zero trust security approach and privilege access management protocol, so that guards against any impropriety. So for a crypto native institution like us, which I think is an important thing to keep in mind, we think about risk and its management in several different ways, including having enterprise level controls, looking at information security risk. We look at legal risk, compliance risk, counterparty risk, market risk, and liquidity risk. So I'm not going to go into too much detail on all of those, but what I can tell you is that within our business-related risk management framework, we have not only risk identification models, we have risk assessment methods, and we also have risk monitoring mechanisms. So that obviously covers everything from our sound anti-money laundering policies and procedures, as well as client risk scorecards. And we also have very rigorous anti-fraud system to evaluate, different potential behavioral, changes of customers, et cetera, so that we ensure that, again, all assets are safeguarded in our system, and that we obviously are acting compliantly and in the spirit of the regulation in the jurisdictions in which we operate. So, all of these different processes and protocols essentially allow us to facilitate better services to our clients, and it helps us with better account management and liquidity management internally. So in terms of my big takeaway, what I would like to say is that, as everyone knows and has heard, the digital assets and cryptocurrency industry is growing very rapidly, and primarily via the innovation that we are seeing in the financial services infrastructure. So the bottom line is that with the addition of new service providers and institutions, there's real opportunity being created. The cryptocurrency market is currently a $3 trillion market, while DeFi, which is a subsegment of that larger industry, has total value locked on their platforms of 200 billion and growing. So if I could leave the audience with one thought, it is that I truly believe, as does Amber Group, that the digital wealth will be the most important category of wealth in the future. And that is due to the decentralized nature of crypto with its blockchain technology and the programmable smart contracts, which effectively have allowed us to achieve something that we haven't been able to do previously, which is trust at zero cost. And the roots of this digital metaverse that everyone is speaking about, really began 20 to 30 years ago with the advent of Web 1.0 and computing. It moved into Web 2.0 with the internet and e-commerce. And now we're at the dawn of Web 3.0. With that comes new opportunities for social interactivity and economic models. So if I would just leave at that, is that it's a growing industry. There's a lot of opportunity, and it's a great moment to get involved.
Thank you. Thank you so much for sharing also that last takeaway as well. Well, that unfortunately concludes our time for today. So thank you so much for joining us today and sharing your expertise and also for this insightful conversation. Thank you so much.
Thank you so much for having me. It's been a pleasure.
Yes, likewise. Have a great day.
You too.